Hello. Welcome to our next chapter, that is your minimum alternate taxation, which we also call as MAT. So now your minimum alternate taxation, what you have to remember, one is minimum alternate taxation and your other is alternate minimum tax. Do not get confused. This is your MAT. Now your MAT, your minimum alternate tax, is only applicable to companies. This is the point that you have to remember. It will not be applicable to individuals. It is only applicable to companies. Your MAT is applicable to companies. Now, in companies, sir, is it applicable to foreign companies? It is not applicable to foreign companies if and only if their DTAA exists. If a DTAA exists, that is your double tax avoidance agreement exists. And remember, and P is not in India. Only both these conditions are satisfied, then MAT will not be applicable. That is, if any of these conditions fail, MAT will become applicable to foreign companies as well. So only if DTAA exists and there is no P in India, only then MAT will not be applicable to the foreign company. I hope this is clear. Now, next is your MAT credit can be carried forward and set off up to 15 assessment years to the extent your normal tax is greater than your MAT. So now the concept of MAT happens that you have to pay some tax, you have to pay some portion of your tax based on some calculation every year, even though as per tax, if that is the amount is much lesser. So if your actual tax liability is less, but your MAT has a greater tax liability, then in such a case, you have to pay your minimum alternate tax. Got it? So since you are paying more tax than you are actually supposed to pay, so you get a credit each year. You get some credit each year. Now this credit you can use in the future years when your MAT calculation is actually lower while your actual tax liability comes higher. So you can use this credit to pay off that tax liability. Okay, now sir, how do you calculate minimum alternate tax? Minimum alternate tax calculation, first of all, you have to remember the section, that is section 115JB. So 115JB asks you gives you the section to calculate your minimum alternate tax. Now, how do you calculate minimum alternate tax? Minimum alternate tax is higher of tax as per income tax. That is, whatever income tax, whatever as per the provisional income tax or tax is payable, or your book profit into 15%. Your book profit into 15% or tax payable as per income tax, whichever is higher, that becomes your minimum alternate tax. That is, this is amount that you have to pay this year. Now this 15% will be 9% if your unit is located in IFSC. Okay, so this is a benefit given to IFSC units, so that instead of 15% they only have to pay 9%. Okay. Now this is post surcharge and HEC, that is your health and education cess. Okay, now sir, what is book profit over here? I know how to calculate tax as per income tax, but what is book profit? Your book profit, they have given a very nice format to learn. Now remember, for book profit, you only and only have to give these adjustments. These adjustments that I have mentioned, only these adjustments. Any adjustment outside this table, you do not have to give any effect. There will be no change in your answer. Okay. So any line item that you do not see in this table, you do not have to give any adjustment until and unless you see that line item in this table. Only then you either have to add it or you have to subtract it from your PNL. I hope that is clear, because they will be giving you a lot of line items which are not included in this format, and they will expect you to make an adjustment. Clear? So you have what, in short, you have to learn this format. Any line item apart from this format, you do not have to give any adjustment. So let's start. So what are the things that you will be adding to your PNL? So these things you will add to PNL only and only if you have debited to PNL. That means you have already subtracted from your PNL, but your MAT will make you add these items back. So now your first is any income tax paid. So if you have subtracted income tax paid from your PNL, you will have to add that back. So any income tax paid, this includes income tax paid and provision, both of them are included. This includes interest on income tax, surcharge, and education cess. Okay, so any interest will also have to be added back. Now, second is any dividend paid or proposed. Any dividend paid or proposed, if you are subtracted from your P&L, you have to add it back, because this is not an expense. This is an appropriation of profits. Any amount transferred to any reserve, this is also not an expense. This is a transfer to another reserve, because you have actually earned this income. Therefore, income tax makes you add this amount back. Any losses of subsidiary company, if you have subtracted any losses of subsidiary company, this you will have to add back because your subsidiary is a separate entity, you are a separate entity, so they make you add this amount back only and only if you debited these items. Any provision that you've made, any provision you've made for any uncertain or contingent liability, that will also have to be added back. Expenses for earning income under which are exempt under section 10, 11 and 12. So under 10, 11 and 12, some incomes have been given which are exempt. So any expense that you have incurred to earn those income, that will also have to be added back. Depreciation debited to P&L account, that is your total depreciation. We will make you add your total depreciation because depreciation has another effect of subtracting. So all the depreciation that you have charged to P&L, first of all add that back. Next is your provision for diminution in value of assets. If you have made any provision where you feel that my value of assets will decrease, if you have made such a provision, you will have to add that back. Balance in revaluation reserve on disposal of asset. That is, if you had revalued your asset, and now you have sold that asset, you have disposed of this asset, this balance will also have to be added back to P&L. Expenses related to share in income of AOP BOI. So any expenses if you have incurred for your AOP BOI's income, that will have to be added because you will also be subtracted in the other side. So we will be discussing that later. Any notional loss on exchange of shares of SPV with unit of business trust. If there is a notional loss, remember, if there is a notional loss in such a case, this will be added back. Actual gain on transfer of units of business trust. Now this has not been debited, this is your income. So any gain that you have actually earned on transfer of units of business trust, that will be added to your P&L. And next is expenses related to royalty or royalty of patent under section 115 BBF. So 115 BBF we have already done in our first class, that is your basic concepts and tax rate. So all of these items have to be added. Now if you notice, I have left line in the middle, that is because I have matched your items to be added and items to be subtracted which are similar, so I've kept them in the same line. So for example, any amount transferred to any reserve from P&L to any reserve, we have added back. However, if any amount is transferred from reserve to P&L, that is if from any other reserve, if suppose from general reserve you transferred it to P&L, income tax will allow you to subtract it because they say, boss, this is not your current year's income, this was your past year's income. So therefore, you can read this line by line so that it is easier to learn them. So any amount transferred from reserve to P&L, this will be subtracted. Any brought forward losses or brought forward unabsorbed depreciation, whichever is lower, you will get the benefit. That is brought forward losses or brought forward unabsorbed depreciation. You have to remember losses and depreciation, whichever is lower. However, in case if there is an application for IBC, what is your IBC? That is your insolvency bankruptcy. So if there is an application under IBC, both of these will be allowed. You don't have to do lower. This will also be allowed and this will also be allowed. You will be able to subtract it and hence you will have to pay less MAT. Got it? So otherwise it is usually whichever is lower, but if there is an IBC application, then it will be both of them. Okay. Now any amount transfer, this we've already done. So any losses of subsidiary company we added back. Any profit of SIC industrial unit, if you have any profit of SIC industrial unit, that will be subtracted, okay, from your book profit, that you do not have to pay MAT on that. Okay. Any income, over here there was expenses for earning the income. Over here is any income exempted under 10, 11, 12. If you earned any income under section 10, 11 or 12, MAT allows you to subtract that income. Over here we had added back the whole depreciation. Over here you will subtract depreciation excluding the part on revaluation assets. So you will only be subtracting the depreciation, but you will exclude the revaluation asset. Okay. Over here what did we do? Any transfer from revaluation reserve, you will also subtract any transfer of revaluation reserve only and only to the extent of depreciation on the revaluation asset. So when you solve the question, you will understand what I'm talking about. So you will any transfer from revaluation reserve, that will be subtracted, but only and only to the extent of depreciation on the revalued asset. Any share in income of AOP BY, that will be subtracted, because any expenses also we had added back. So any share in income of AOP BY will also be subtracted, because it has already been taxed in the hands of AOP and BY. Got it? Therefore, this is being subtracted. Over here, what did we add back? We added notional loss on exchange of shares. Therefore, they will also allow you to subtract any notional gain on exchange of shares of SPV with unit of business trust. Okay, so notional loss will be added back and notional gain will be subtracted. Then there is income by way of royalty or patent. Over here there was expenses related to royalty. Over here there is income. So if your expense has been added back, we will allow you to subtract your income under section 115 BBF. Clear? So these are all your points related to book profit. Now there are some additional adjustments that have to be given if the company is required to comply with Ind AS. So if the company is required to comply with Ind AS, there are some special adjustments. So continuing the same table, any items credited to OCI. So any items which have been credited to be OCI but not reclassified to PNL. That is, sometimes some assets which income you gain, that I will classify as OCI. That is, any change will be transferred to OCI and they cannot be they can never be classified to PNL. These will have to be added back. Next is gain from change in fair value of equity instruments. Any fair value change, if you have gained any fair value change due to equity instruments fair value increasing through OCI and revaluation surplus from assets on disposal, this will also have to be added back. Next is any one-fifth of transition amount. That is, this will be given in the question itself. So one-fifth of the transition amount you will have to add back. And last is amount debited to statement of P&L on distribution of non-cash assets to shareholder in the demerger. So if you have debited anything in your P&L because you have distributed non-cash assets, that is any assets other than cash, to shareholders in a demerger, if you have debited anything in your P&L, this will also have to be added back. Okay, now let's see what items will be subtracted. Items subtracted over here, items credited to OCI, over here items debited to OCI, not to be reclassified to PNL. So over here, when we have already credited, this will be added. If they have been credited to OCI, so we are transferring this income from OCI to PNL. Therefore, we are adding it. And over here, if any item debited to OCI, this means that boss, originally, ideally, this should have been debited to PNL, right? Therefore, we are subtracting this amount from your PNL. Next is your loss from change in fair value of equity instrument through OCI. Because this loss has been transferred through OCI, they say ki boss, this loss is actually through your PNL. Therefore, over here it is the same. Over here it says gain, over here it says loss. Therefore, they have opposite effect. So this loss should ideally have been hit PNL, but you have hit OCI because of your accounting principles. Therefore, they say that boss, this we will allow you to subtract from your PNL. And last is your any amount credited. See, over here there is debited, over here it is credited. Any amount credited to statement of P&L on distribution of non-cash assets in a demerger. Okay, now one point you have to remember, a lot of students make a mistake. Over here, when we say section 10, 11, 12, 10, 11, 12, what you have to remember, that 10AA SEZ, the section 10AA which we have already studied about SEZ taxation, your 10AA is not a part of section 10. So remember, if they have given anything related to 10AA, you do not have to give any adjustments, because my section 10 and section 10AA are both different. You only and only have to give adjustments that belong to this table. So therefore, I have kept a note that 10AA is not included under section 10, so that you do not forget. And with this, we are done with our chapter minimum alternate taxation. And in our next chapter, we will be doing alternate minimum tax, small concept. And I'll see you in the next class.